Welcome to the expanded version of the Finding Investors cheat sheet. I'm excited for you to join me on this. This is really going to serve as an expanded view on this cheat sheet that you can download here if you haven't already, and it's also going to be sent to your email. So here I'm really going to talk through and walk through a lot of the ideas and concepts in this guide or cheat sheet, how you can implement it into your real estate or private equity business as you are looking to raise capital over the next few months. Now, like I said, this is going to be focused around finding investors, and there are some assumptions that go into that, which we will start to cover. So let's go ahead and dive right in. As we get started, I think it's important to know a little bit of context around who I am and what the purpose and context of this cheat sheet is. My name is Nikita. I'm the founder of Raise. Over the past several years, I have worked with several hundred emerging fund managers, hundreds of projects. We have worked with dozens of clients, taking them through the entire capital raise process, from deal origination to finding investors to raising capital and then to scaling their prospective strategies from there. And really what we specialize in is helping teams and individuals get investor ready in 30 days or less. Meaning if you have an idea or a concept or a strategy that you're looking to raise money for, looking to raise at least $5 million to $25 million for, we take people through the necessary steps, procedures, and assets, putting those in place within 30 days to be ready to get in front of the right types of investors. Now, we mainly work with real estate projects and private equity projects to accomplish this who are looking to raise at least $5 million. And so really what we're going to cover here is first, who is your ideal investor? There's lots of different types of investors out there, from accredited investors to high net worths to family offices to larger funds, right? Who is going to be the best fit for your deal or for your strategy? What does your ideal investor need to see? What do you need to have in place? Whether that's assets, whether that's strategy, whether that's even the correct way of saying something, and then how you can find these ideal types of investors. And this is really the exercise that we go through with all of our clients. It's very simple. The first, identifying who your ideal investor is, how we can best cater things to them, and then where they are going to be. Now, if you are interested in supercharging your next capital raise, please reach out to me directly. You can either email me at nikita@raisepro.io, or you can go ahead and visit this website. There will also be a link below to book a call, which is goraise.io/join, where we can help you get ready for your capital raise in 30 days or less, put together world-class materials, that really are going to get investors saying yes, which is really what we specialize in, is helping you bring the best deal and opportunity possible in front of the right types of investors. And we're working with you one-on-one through the entire capital raising process. So let's go ahead and get something started here as we dive into the cheat sheet. We've covered this a little bit, but like I said, we have worked with hundreds of first-time fund managers over the past several years, dozens of real estate projects. We have helped dozens of people and teams with their first capital raises all the way to their third, fourth, and fifth capital raises, ranging from $1 million all the way up to several $100 million, in addition to doing several $100 million of our own deals and our own capital raises in that process. And so really the first step, like we mentioned above, is first to identify who is your ideal investor. If you're looking at finding the right investors, first we need to understand who these people are, what do they want, and then we can start to reverse engineer where exactly they will be. I can't just give you a list of investors and say, hey, call X, Y, and Z people, and you're going to fill your entire capital raise. Really, my goal here is to give you the right resources and framework of thinking or way of thinking in order to be able to do this yourself and to have these capital raising strategies and processes in place in-house. And really, that's first going to start with understanding a few basic things. What is your target capital raise? Right? What is your average check size that you're looking for? How many investors do you want in your deal? I talked to a lot of people who are looking to raise $10 million, and their pitch deck says $50,000 minimum checks. Well, if you do the math there, that's a lot of investors that you're going to need to have in your project or strategy or fund. Right? Does your type of fund and exemptions actually allow you to have that many investors? What does it look like to manage that many investors? Not even to mention finding all those investors and having the right pipelines and funnels in place. Now, it is certainly possible, and I do know a lot of people who are raising several $1 million per month, especially for their real estate strategies, and their average check size is between $50,000 and $100,000, but there's a lot of work and a lot of budget that goes into that. And this is really where we start to get into, okay, who is this attractive for people who see deals, people who don't see a lot of deals, because there is a big differentiator there, right? If you are pitching your deal or strategy to a bunch of people who do not invest very often, that's going to be very different from pitching your deal or strategy to people who do invest very often and know exactly what they want and have been involved in dozens, if not hundreds, of different projects as a limited partner or a general partner. Now, do you want a large capital partner? You want one check to cover the entire deal, right? A lot of times, if you are going after larger checks, they're going to come with larger demands. If you find a family office that's willing to fill your entire $20 million need for your development or project, they're most likely going to negotiate very heavily with what stake that they are going to play and exactly what fees and what performance you are going to be able to charge when it comes to that deal or project. Which brings us back to maybe you prefer smaller capital partners, which are going to take a little bit more work to find and be a little bit harder to find, especially people who don't see a lot of deals, right? You see a lot of social media advertising campaigns and content geared towards finding these types of people, and we'll dive into a bunch of different funnels and marketing strategies for them. But these are the initial things to keep in mind when it comes to who do you want to invest in your deal and who ultimately is going to be the best fit. How much investor relations do you want to do? If you have 50 investors, 100 investors, several hundred investors, do you have the necessary systems and softwares and personnel to be able to manage that many investors in your deal or fund? Now we get into the specific types of investors, which we've talked about. Accredited investors, their typical check sizes may be $50,000 up to $200,000 or $250,000. If you find high net worth individuals, they're going to be, slightly larger. Maybe you can find larger capital partners who can do $500,000 to, maybe $2 to $3 million if you really start to get into the right circles. We have family offices, which could be even larger checks, larger institutions, real estate funds, REITs, private equity firms, debt partners. There's lots of options out there in terms of different types of people or different types of investors that can invest in your deal. Now, if you've already explored all these different types of people, I just ask that you consider things from a new point of view as I talk through some of these, and I think that this is going to jog some ideas in your brain of how you can find these people, how you can approach these people, or if you've already been talking to these people, what you really need to pivot and focus on in order to get them to start saying yes, right? Because there's really two different phases of raising capital. First, there's finding the investors, and then there's pitching the investors. And we're going to talk through mainly where to find these people. And if you need additional help on what to say to them, what to show to them, what to send them, how to convert them, just reach out to us directly. My email is nikita@raisepro.io. We'll also have a link where you can book a call directly with myself or my team. Now, one thing that a lot of people do not consider is we talk about accredited investors, family offices, some of these larger institutions, other capital raisers. What do you need to have in place in order to attract other people to raise capital for your deal? A lot of people come to me asking me directly, Nikita, will you come and raise money for our deal? Nikita, will you bring 10, 20, $30 million to the table? And I look at what they have in place, and they don't have a lot in place. They're asking me to bring money to the table, put together a pitch deck, find investors, bring investors through the entire sales process, do investor relations, figure out the projections and all the financial models to back up what the pitch deck that I then made is going to be saying. And when all is said and done, I'm doing 90% of the work. Capital raisers do not want to partner with you if they are going to be responsible for 90+% of the work. Now, there are different groups and individuals that you can approach, investment banks, broker-dealers, placement agents who do that, and they charge very, very large fees, $150,000 plus upfront fees, plus success fees on the back end. We'll talk about some of the specifics there. But think through, if you are looking for somebody to come in to partner with you on your deal, to become a general partner, to buy into the long-term vision, first, do you have a vision in place? We're going to talk through all those different things that those types of individuals are going to need to see and what you need to have in place to even attract other people to raise capital for you. And for each of the above investors, I really urge people to sit down and list out what is important to them. What do they want? Are they looking for passive income? Are they looking for a certain equity multiple, wealth preservation, secured capital? Whoever is going to best fit your deal or strategy in terms of your target raise, how many investors you want, the type of capital partner you want, whether it's a larger capital partner, smaller capital partner that might be a little bit more flexible. What do these people want? And start to list down exactly what their goals are and what their desires are when it comes to investing in real estate or private equity or whatever your deal or strategy is. Even if it's a family office, what does a family office want out of investments? Do they want proprietary deal flow? Do they want certain equity multiples? Do they want certain liquidity? Do they, want certain risk management strategies in place? List out all the things that are going to be important to these types of people. If you're raising money from a bunch of smaller accredited investors like doctors or lawyers or other people who offer professional services, what's important to them? Is it passive income? Is it a real estate fueled lifestyle? Is it certain equity multiples? Is it, doubling their savings every 10, 15 years, right? Start to get very specific and list out a lot of different possibilities, because this is going to be what you start to put into your pitch, into your materials, but it's also going to help you understand how to speak the language once you do get into the room with some of these individuals. So that brings us to the second phase of getting investor ready. The first phase is, identifying your ideal investor avatar. So take some time, do it as a group, as a team. Make this an hour long, even 30-minute long Zoom meeting where this is a good brainstorm session, really figure out who's going to be the best fit for you. Then the next phase of getting investor ready, which is really what I am passionate about, what I specialize in. Once again, if you guys need help getting investor ready, we have great options of working directly with you, with your team, to help you not only put all the right materials in place, but really the foundations of your capital raising strategy, so you can make this an evergreen process going forward. Now, the very first thing that you're going to need to do when it comes to getting investor ready is keep in mind the investor's perspective. So we've started to do it here when it comes to, okay, what does your investor want? What's important to them? What's important to them in their own language? Not what you think is going to be important to them, but what are they looking for in their own language? The story that you're telling should be coming from the perspective of understanding what they want in their language. That's going to be the very first thing. The next thing that you need to really look into is making sure that your deal makes sense without any further changes. I see so many people who go to investors and just have to go back and forth for weeks, if not several months at a time, adjusting the deal, adjusting the strategy, making sure things are going to fit for their appetite, or really just putting things together that they haven't thought of quite yet. Really think through everything possible when you are originating this deal before you are approaching investors. Making sure you know the exact required amount of capital, and even just understanding where every single dollar is going to be going for that. I say use of funds here, but really understand cash in and cash out. I've talked to a lot of operators who they tell me they're raising $2 million, and we start to get into the specifics and realize, $2 million isn't enough. They need to raise $2.1 million. They need to raise $2.2 million. And while that may not seem like a very big deal, it is a very big deal when you're talking to sophisticated capital allocators and investors, right? Having all of these things in a row and really understanding them inside and out is going to set you apart from anybody else out there. Because I see how many people who are not prepared in these areas. And if you simply show up prepared in these areas of understanding your numbers inside and out and having a complete deal in place, you're going to stand out immediately. Now, that is not to say that it's going to be perfect right out of the gate. Obviously, things are going to need to be adjusted based on a specific type of investor, sometimes what their needs and requirements are. But at least have all of these things in place. Your deployment schedules, whether or not you're having reserve capital, expenses for operations or management fees, really you want to show you have thought through everything. The money you are raising, it has a journey, it has a purpose, right? You are showing investors that you are a trusted steward of their capital. So make sure everything is modeled out, put in place, and articulated in your pitch deck, your business plan, in your different models that you're going to be presenting and sharing with investors. Now, the next thing you need to have in order to get investor ready is an attractive pitch deck. When I say attractive pitch deck, it is visually pleasing, but it also sounds good when it is presented. It makes sense. It can read itself, essentially. If you were to send it to somebody, they can look at it, understand what makes you unique and compelling, what your edge is, how you guys are competitive, and exactly what you are doing in your strategy. Too often do I get sent pitch decks who, even after diving through it, I don't quite understand what they're doing. A lot of pitch decks are so full of fluff when it comes to here's why we believe in X market, here's why we believe in X or Y industry, and not enough about we are blank team. Here's what we do. Here's why we do it. Here's where we do it, and here's why we have chosen to do it here. It really can be that simple. When you're putting together a thesis, it needs to be very well articulated and put first and foremost in your pitch deck. People should not read multiple pages of your deck without knowing exactly what you're doing at a high level. And if you can't explain exactly what you're doing, you probably need help from somebody else to help you articulate this, or else you're going to lose a lot of interest with a lot of investors very quickly. It doesn't matter how technical of a founder you are, you need to be able to explain these things and to put a deck together that reads well, that sounds good, and that communicates your story and your advantages. So, like we said, starting off, telling a story that investors can read through and sell themselves. It shows proper research. It outlines your assumptions. There's data that backs those assumptions, right? Your projections are very clear. There is a specified time frame of your deal. There are specified returns within that time frame. There's deployment schedules. There's projected IRRs and cash on cash returns. You have an exit strategy and an entry strategy. And this goes for developments, acquisitions. It really doesn't matter what you're doing, but having all of these things in your deck and simplifying them is going to be huge. And then obviously has an official ask from investors with relevant terms. Too often do I see pitch decks where they're not asking anything. And that's the whole entire point of a pitch deck, is to pitch investors only to get to the end and you haven't ever asked for anything. So really understanding what is your ask from investors and having all of the relevant terms. If it's a syndication, if it's a fund, having all those on there as well. I cannot stress enough, what makes you unique and compelling is so important. Not only to have it, right, just to have something in there that says, hey, here's why we're unique and compelling, but to really be able to present that and lean into it. Too many times do I see groups who are doing the same thing as everybody else. And when I ask them why they're doing it and what their advantages, they list the exact same things as everybody else. So please take the time when you're crafting your story to really get to the bottom of what makes you unique and compelling. Maybe it is your edge to find deals. Maybe it is your ability to deploy capital quickly. Maybe it is your ability to work with certain types of tenants or a certain development strategy or have certain IP. Have this articulated, have it readily available, and make sure that it is incorporated into your deck. Like I said, have your thesis clearly simplified. Investors need to understand what you're doing it, why you're doing it, where money goes in the deal, and where money comes out of the deal. Really, when it comes to simplest terms, if you can nail those things, investors are going to have a great time with your deck. Now, we've talked about this a little bit. We're really knowing your deal inside and out. I've talked about it from the financial perspective of your numbers and your timelines, but also from the perspective of relevant questions and the tough questions. I think it is very effective and powerful to sit down as a team, or if you're a solo operator, to sit down and list out all of the main objections that you can think of. Ask a friend or a family member to give you genuine, honest feedback on your strategy, on your deal, all the things that could go wrong, all the things that maybe don't quite make sense, and just be brutally honest with yourself in answering some of these questions, right? A lot of times there's not going to be the perfect answer, but what I would say is the perfect answer is a well thought out and articulated answer. Not necessarily a certain clever solution to each one of these questions, but rather just having an articulated answer to these questions is going to go a very long way when it comes to showing that you've done your homework, that you're prepared, and that you know what you're talking about, that you've already thought through all of these things that investors are going to be saying or potentially wondering. Have FAQ slides attached to the end of your deck. Have a separate document that outlines FAQs, right? I like to help clients ask themselves the tough questions and then figure out the best answers for them. And it really goes a very long way when it comes to getting in the door with the right types of investors, because as we'll go over here shortly, sometimes the investors that you need to find are going to be cold. You're not going to know them and they're not going to know you. And so having these things is going to set you apart immediately and really get you a lot further than otherwise would. Now, going down the list, you have reasonable timelines, right? If your investors think that things are too rushed, you're not even going to get follow-up appointments. They're really just going to say no right away. After simply glancing over the deal, if they see, oh, these guys are trying to close the next $10 million in the next 2 weeks, it's not usually going to be a good fit. Investors need to feel like they have enough time and bandwidth to do their necessary due diligence and to make that decision. And so I think the best way to raise capital quickly is to be prepared and have a lot of the foundations in place. Too often do I see operators, and just the other week I had a gentleman who's raising money for a multifamily acquisition. They needed another $5.7 million, and they needed it by the end of that week. He gave me 3.5 days notice, and he was really frantically struggling, trying to figure out, oh, well, all we need to do is find the right investor to call and they'll wire us the money by the end of the week, when in reality, the capital raising process and getting in front of the right investors starts well before that. You have to have a good plan in place. And especially if your operation or team or strategy is going to rely on raising capital continuously over the next 5 years, 10 years, 15 years, you have to have some of these foundations in place in order to truly have a capital on tap system that you guys can always turn to. Now, the last part of getting investor ready is going to be having a prepared data room. This can be sent out after your initial pitch, but this is going to do a lot of good even when it comes to you internally with your large capital raise, $5 million, $25 million on the low end, of just having all of your ducks in a row. The more sophisticated investors you talk to, the more they're going to want to see these things. The less sophisticated investors you're talking to, the better it helps them make the decision to invest with you. All right, so having a prepared data room is going to go a very long way, and I always recommend having at least some of these things in place. Pause it, take a snapshot here. Hopefully you're also downloading this cheat sheet as we're talking through it, so you can come back and refer to this. So now I want to get into what you came here for, which is finding investors. Like I said, there are caveats to finding investors, and that's why I wanted to start with some of the things that I did, because a lot of what we do and what we have found is if you are investor ready, and if you have all the necessary things in place, if you have even just an outside perspective on what works, and somebody who's done dozens of deals and has helped hundreds of individuals do deals, a lot of times that is going to help you find the right investors and get in front of them a lot quicker. Too often do I talk to teams who have already burned through several dozen investors pitching their deal or strategy, when in reality they could have already raised their first $5 to $10 million if they just would have had things right in the first place. And instead they're spending an additional 18 to 24 months learning those lessons, when in reality they should have had those right out of the gate. I see several funds even still that are trying to raise their initial $25 million or $50 million target, who maybe have a few $1,000,000 in commitments but aren't really able to deploy. And certainly it's not worth the fund manager's time to deploy that capital without really deploying the full $25 million or $50 million mark, which they could have had if they just had some of the right systems and priorities in place. So when it comes to finding investors, and I would say who are interested in your deal, because there's lots of investors out there and most of them probably are not going to be interested in your deal or strategy, and that is okay. We are finding the investors that are relevant investors and that are interested in this. Now, I want to put a huge caveat here. Keep in mind the laws and regulations around marketing, selling, recommending investments. Please consult with your attorney exactly what you are allowed to say and do online via cold outreach. All of this is with the assumption that you are following all legal regulations and guidelines when it comes to raising capital. If you haven't talked to an attorney yet and you need somebody, reach out to me or us. We have lots of recommendations of wonderful real estate and private equity attorneys that we like to work with. So please keep that in mind, and that you're following all relevant laws and regulations. So a few different points or ideas that I want to suggest to you before we dive into the specifics of where do I go, what do I say, is I want to really impress upon you that there's different categories of investors and that there's investors who are in different stages, right? Keep some of these things in mind as we're talking through where to find these individuals. So first, there are investors that you have to generate interest with, right? These are people who organically are not looking for deals, who most likely are going to have $50,000 or $250,000 checks, and they probably don't invest very often. Now, I think it's important to understand why they don't invest often, because all of these questions are helping us identify where these people are. Once we understand them, it's very easy to find them. So why they don't invest often is probably because they make good money via W-2 employment, or they're self-employed. They just don't have a lot of time to focus on investing, right? People who are making $250,000 to $500,000 a year really a lot of the time are pretty busy, right? They're working 40, 50, 60-hour weeks on their business or in their profession and aren't actively looking to invest. Maybe they have, 401k options if they're W-2. Maybe they have, they're just investing a lot of money back into their business. But these people are generally busy, and they probably also don't prioritize investing because they don't know very much about it. If they are a high income earner, mid to high six figures, they're most likely just focused on their career. And they're probably more focused on spending money than they are on investing money, because they have, a pretty good lifestyle lined up for this foreseeable future. So keep that in mind. Now, then the question becomes, how do we generate interest? Well, the first part of generating interest comes back to what we were saying above, which is what do these people want? Listing out exactly what they want in their own language, right? Now, actually finding these people and generating the interest in the form of a lead, we can go through some specifics here, which is frequent content on social media channels. When I say frequent content, this is at least 3 to 5 times per week that there's something being posted. It's not being posted from a brand. People usually don't trust brands that they don't recognize. Nike and Adidas, Red Bull, they have built brands over the course of decades. And they have spent billions of dollars building these brands. We cannot take the same approach when it comes to a startup or something that nobody's ever heard of before. Put a face behind the content, right? Put a face behind this frequent content when it comes to social media. Now, the next thing that you should start doing right away, if you haven't already, is building an email list. You can build an email list with lead magnets off of website traffic or traffic from your content, right? If you are posting content frequently, that should funnel people to do something, whether it's subscribe to your YouTube channel, opt into your email list, whatever it is. Content always needs to have a purpose or a call to action, a CTA, right? And so start building an email list. These are going to turn into your future leads. I would recommend hosting monthly or perhaps even more frequent webinars around your investment strategy or thesis. Education, I found, works very well. Now, if you have a specific deal that you're raising for, like I just had a few clients a few weeks, they were looking to raise $2 million for some mobile home park acquisitions. If there's a specific deal that you're looking to raise for, host the webinar around the deal and some of the benefits of the deal. Start to open people's eyes to different investment strategies. Maybe people are only used to multifamily, and you can open their eyes to mobile home parks, or RV parks are different strategies here. Education is going to be a really good approach. There's a few different strategies that I see people do education around. You see a lot of investors doing, education around tax savings, their IRA strategy. But what I recommend is, no matter the strategy you take, no matter the types of people you're going after, is pick a specific avatar. Pick one niche and really specialize in it. And what I would recommend is looking at what you are already familiar with. If you have a background in sales, if you have a background in door-to-door sales, as a good example of a lady that I was talking to, and I recommended she go after other door-to-door professionals, whether that's sales managers or sales teams. She already speaks their language. She knows how to find them a little bit easier because she's familiar with that industry, and she can create an investment product tailored for those types of people. If you're a retired doctor, maybe consider going after doctors. If your partner's a doctor, maybe that's a good industry for you guys to be in. But start by picking one specific avatar, tailor your language and your messaging to them. What a doctor is intrigued by is going to be very different from what a solar sales rep is going to be intrigued by. Their priorities are going to be different. Their language and their problems are all going to be different, which is why I recommend picking one specific type of avatar. That way your messaging and your content is very focused, and it is very magnetic, if you will. It is going to be drawing these people in, and that ultimately is how you scale faster. A lot of people think they want to raise money from everyone, but if you are raising money from everybody, ultimately you're probably raising money from nobody, if that makes sense. And so pick somebody specific. Now, those who are already interested. So we've talked about people who you have to generate interest with. Now, people who are already interested, these are likely going to be larger check sizes from institutions. Institutions or groups who are used to investing: REITs, family offices, other funds, investment firms, people who specialize in investing. Maybe it's a co-GP structure, a JV structure. Maybe they just have really high minimum check requirements. Keep some of these things in mind. We're going to cruise through here a little bit. So take some time, really start to look through some of these categories, what these people want, what these people don't want. The third idea, and we've kind of mentioned this before, is we've talked about people you have to generate interest with versus people you don't have to generate interest with. And this generally lines up with people who see deals and people who don't really see a lot of deals. So take some time and read through some of the specifics here. What I want to focus on for the last remaining time we have together is how to find these investors, as well as some of the funnels that we put in place and that I recommend that other people put in place. But first, some of the tools and assets you need to have in place for finding investors. I recommend having a professional website, a 2 to 3 minute video that outlines your thesis, who you are, what makes you unique and compelling, putting that right on the landing page of your website, having some form of opt-in form on your site where you can be collecting email addresses, sending people to from social media or email campaigns. Have aligned messaging across your LinkedIn profile, Facebook profile, your website, making sure everything is telling the exact same story. Have a budget for networking groups, a budget for other marketing channels. If you're looking to raise $100 million and you're looking to do so with $0 out of your pocket, you are not going to raise $100 million. You might. You may, somehow pull it off, but most of the time you need to have budgets to allocate towards the right resources of getting in the right rooms, having the right conversations, hiring the right help in order to really get these things moving quickly and put fuel on the fire. And we'll talk through some of those things a little bit later. Have a pitch deck in place, FAQs, data room, and bonus investor data sources. We have a lot of proprietary investor data sources that we use for ourselves and for our clients. We use these data sources to construct LinkedIn automation campaigns, as well as email campaigns, advertising campaigns, as well as cold outreach campaigns. We can target and segment based on different size real estate firms and potential investors for real estate or private equity or hedge funds or mutual funds, different things like that, to really pool in lots of different investor data sources. If you guys are interested in investor data sources, reach out to me directly at nikita@raisepro.io or book a call below. We can talk about some of those things. So now what everybody's here for is how to find investors. First, accredited investors who do not see deals. First, you pick a niche. You establish your sales process. That's generally going to look like education is, stoking general interest, which leads to a sales conversation, right? This does take effort. This is going to be content, email, webinars that has a call to action where people are opting in to find out more information that is ultimately going to transition into a sales conversation. Keep in mind though, education is going to come first. You can do this, find these people also through marketing channels. You can pay and use paid advertising to fuel your efforts to get, dozens of investor conversations set up per week. Now, there are costs associated with this, but it's good to keep all these different avenues in mind, right? Networking efforts. Who are these people? How much money do they make? Where do people spend time that make $500,000 to $2 million per year? Where are they hanging out? What country clubs, what networking groups, what car groups, what real estate masterminds are they attending? Look for things that are local to you. Start to assimilate yourself into these different groups. It pays to lay the foundations of a good network that is built well in advance before you are trying to rush to raise capital. So take some time and invest in some of the right networks and groups around you, because really ultimately there's two ways to get in the room with people. You can work your way in or you can buy your way in, and sometimes buying your way in is going to be a little bit faster. Now, accredited investors who do see deals, these people are likely already members of local real estate groups and entrepreneur groups. Once again, join some of these groups, get in touch with these people. Look up connections on LinkedIn by certain industry, by certain job title and areas around you. Figure out what these people like to do, where are these people hanging out, and start to incorporate that into your networking groups and networking practices. Follow real estate investors on Twitter. This is a hugely underestimated strategy to raise capital. There's a lot of investors and capital allocators that hang out on Twitter, and they provide a lot of education around their strategies. Find these people, follow these people. Simply start by searching real estate and seeing who comes up. It's a very easy and quick way to start to build genuine engagement with people, right? I find if you're connecting with people in an in-person networking group or an online or social media group, or just as a follower or a connection, a lot of the same principles are going to apply, which is providing genuine engagement, trying to provide value, but really just trying to establish some sort of friendship and relationship there. Now, family offices, a lot of people come to me looking for large checks. They want to pitch family offices. How do I talk to family offices? Well, first, start by looking up local family offices. Look up local angel investment groups. Talk to other real estate investors. This is why it's so important to start networking and building your network. Even if it's not to raise money from them, just get a network of other people who are doing deals, right? There's a lot of people who are likely doing types of deals and developments around you. Network with these people. See who they have come in contact with, right? Who do they recommend for hard money sources, debt sources, right? Who have they worked with in the local area, if anybody, right? Start to just get familiar with some of these things. Now, you can also use family office databases. There's lots of different databases online that you can leverage and use and pay for information for. Now, once again, you have to have your stuff in place. You have to have the right messaging and the right approach and understanding what these people want. But you can simply pay for family office databases. Attend family office events, identify who is the CFO or CIO for these family offices, right? LinkedIn Sales Navigator is a wonderful tool if you spend some time and really using it to understand different job titles and companies, and you're able to just laser target a lot of the right people around you. But be 1,000% prepared. I cannot stress this enough. They will make their decision in the first 2 to 3 seconds, and you have to have everything in place and have the right approach in order to truly get in that door. Now, private equity funds, there's lots of fund databases that are available. If you need some data or insight on this, please reach out to me directly. But there's lots of databases, once again, that you can purchase access to. There's lots of lead sources that you can purchase access to. Leads are not the issue. A lot of times it's understanding how to approach these leads. But research local real estate funds. I guarantee you there's a lot of real estate funds around you, and they probably call themselves investment groups or investment companies or real estate firms. Just really start to understand who is around you. Call all the different funds around you. Ask if they're looking for deal flow, what types of deals that they're looking for. Start to establish relationships with these individuals, and raising money from private equity funds will start to get a lot easier, because then you become somebody that they recognize, that they're familiar with, and that's possibly just already sending them deal flow, right? Do your research, just do your research in your local area. Understand what is already there. Too many people skip this step. Take the time, family offices, funds, and whatnot. On to the next one. Investment banks, broker dealers, placement agents. These are people that you can pay money to for an upfront fee plus usually a success fee on the back end that can do much larger races. I have engaged with a lot of different investment banks and broker dealers who we can pay a fee to, whether that's a monthly retainer or one-time upfront fee, and they will source the entire equity and debt stack for whatever deal or strategy that we're looking for. If you're interested in this path, especially if you're looking to raise $50 million or more and you have a budget in place, at least $150,000 to $250,000 to get your capital raise done, reach out to me and I can introduce you to broker dealers, investment banks that I've worked with before, and that I can, hopefully help speed up that process when it comes to getting in the door. But really the first and most important thing I would reemphasize is interview them as much as they are interviewing you. Look at their past success, types of deals that they have already raised for, investors that they have in their network, proof of success from strategies similar to yours. Make sure that it is a true dating process, that is a two-way process, that everybody feels comfortable moving forward. But yes, once again, you can pay a lot of these types of groups and individuals to go source the entire capital raise for you. Now, whether or not they're able to do it really is going to depend on their experience and expertise within that specific type of industry. So once again, if you need more specific help around that, let me know. Now, I want to talk about something unique for the last few minutes, is finding people who you can partner with to raise capital for you. Too often, like I said before, people are coming to me and say, hey, Nikita, can you raise capital? Can you help us out? Can you, just bring all this money to the table? When in reality, I look at it and I say, you know what? I could probably do all of this without you. What in reality do you bring to the table? If I'm bringing the capital and the financial models and the pitch deck and helping refine the strategy and learning everything inside and out, what do you bring to the table? And this is where it's very important for you, if you're a team or an operator who's looking to find somebody else to raise capital for you, to understand really what you are looking for. Are you looking for somebody to run your investor relations? Or are you looking for a true GP partner who can help you scale in the long term with consistent capital raising strategies? And so what I think people should really keep in mind is this. Is your deal or strategy truly that unique? What responsibilities are required of this person who you're looking to raise capital for you? What are their responsibilities that you are expecting of them? If they have to help with deal origination, are they better off doing it on their own? And I think that's a question you should be asking yourself, is why would this person not just do this on their own, and crafting a unique offer specific for them in that situation? A lot of times what is necessary is, what is your vision? Your short-term vision as an operator or founder, or your long-term vision? One thing I don't think people talk about enough is the very first test you have as a founder is recruiting other people to join you in this journey. And if you fail to do that, you have likely failed as a founder right out of the gate. It is so important to be able to recruit other people to your vision, not only your short-term vision, but your long-term vision, and to establish true partnerships and relationships with the right types of individuals that can help your business or strategy scale in the long term. Why should this person feel compelled to join their journey with yours is ultimately the question that you should be answering and the offer that you should be catering. Right? Great founders have that ability to recruit others to their vision. And I think this is a very important skill to master, but also a very important perspective to keep in mind as you are looking at finding investors or finding individuals that can help you raise capital. How much of the pie are you willing to give up? Somebody who can bring the full amount of capital to the stack may ask for 30 or 40% of the general partnership. Right? Does that fit in your expectations, and does that fit your requirements or what you are offering? So keep all these things in mind, right? And talk to your attorney, figure out how you can compensate different groups or individuals for helping you raise capital if you can at all. But really understand what is required on your end as the operator or as the founder when it comes to recruiting other people for your vision. This is the number one thing that I find is missing among groups who are not able to find somebody else to raise capital for them or to help them and assist them in their capital raising efforts. But if you can nail this, it becomes very easy to scale your deal or strategy in the right way because you have people who are recruited to your vision, who are equally yoked and incentivized to make this work. Now, who these people are, if you're looking at, okay, well, great, I can recruit them, I've got the vision, I think we've got something pretty special. Who are these people that could potentially help us raise capital? Well, these are existing fund managers, wealth managers. These are, commercial real estate brokers. These are managing directors in investment firms. These are experienced real estate investors. These are chief investment officers, right? These are people who have quite a bit of experience in the space, which is why, once again, I bring up the fact of, these people can likely do it without you, especially if they do have access to capital and the ability to raise money. They can likely do it without you. So why and what offer can we put in place to incentivize them to do it with you? Now, where to find them is networking groups, financial events, fund-specific events. LinkedIn is a wonderful resource to find people, to outreach them, but also to genuinely engage with people. And then once again, I suggest platforms like Twitter. And how you approach is always going to be value first. Establishing genuine relationships, genuine connections, it's always going to go the biggest way. Engaging with people on social media may be foreign to some of us, or some of you. I am pretty young and find that most people in their 40s or 50s aren't super active on social media. However, it can be a great tool to simply engage by liking and commenting, sending a message here and there to start to establish some of these relationships with individuals that you're trying to work your way into the door with. Like I said, it's pretty easy to find these people and connect with them once you know what you're looking for, which is why I recommend people take so much time in understanding who is your ideal investor, what do they want, where can you find them, where can you find them locally before reaching out outside of that. Have meaningful conversations. What I always suggest is give, and then maybe one day ask, right? Give, I think is always a really good approach. So we have covered a lot of different types of investors, where to potentially find these people, how to start thinking about finding investors or finding somebody who can help you raise capital from the outside. What I want to go over just briefly as we're wrapping up is different funnels. You can pay and have marketing budget towards specific resources and funnels that are actually automating most of this entire process. Like there's LinkedIn automation softwares where you can target specific audiences. Like I said, pick a niche or pick a specific group of people, or if you're going after people who can help you raise money, right? Whatever your strategy is, pick a specific audience that you want to target. And we actually have a lot of data that we can upload into LinkedIn to make that targeting 10 times more specific from our proprietary data sources. Align your LinkedIn profile with exactly how you help this audience, right? So as you're outreaching, your LinkedIn profile looks good to when they click on it and say, oh, who is this guy? What is he doing? What is Nikita doing? Well, Nikita is the founder of CapitalRaise.io, helping individuals raise their first $5 million to $25 million by getting investor ready and identifying the right types of investors. Well, that's a pretty sweet offer, and it makes sense to people right away. So when it comes to your LinkedIn profile, when you're running these automation sequences, making sure yours is aligned with who exactly you're looking to attract in terms of investors and what exactly you guys are currently doing. So you can use search filters in Sales Navigator, search by industry, job title. It's a pretty easy process. Then these softwares are going to send auto connection requests with a 2 to 3 message sequence attached to that. That is essentially,
putting engagement in place for you all automatically. If you need more specifics on how to set up some of these funnels or what to use or where to even get started, reach out to me and I'll point you in the right direction here. But for sake of time, we'll go over paid advertising next, which you can use Facebook, Instagram, YouTube. Usually what this process looks like is most people are just running a simple ad. They're running an advertisement that goes to a landing page with some sort of opt-in. And then what you are giving people from that ad is either the opportunity to register for a webinar or book a call directly with your team or watch a VSL, which stands for Video Sales Letter, which is essentially your proposition or your pitch if you are selling an investment on that. Once again, talk to an attorney, figure out what the rules and regulations are around your filings and exemptions. Now, an easy group to target is you can target wealthy zip codes. Like I said, we have proprietary investor data where we can literally go by all the wealthiest zip codes, find people who are active on social media, download these lists, upload them to Facebook, YouTube, Instagram, target these people directly, things like that. So lots of different strategies when it comes to targeting who these people are. But start with $50 a day. Start with $50 a day in ad spend. Figure out really what's working, what's not, scale things from there, but really just scale based on your acquisition costs. If you, through your social media channels and funnels, are able to spend $300 and get a $100,000 investor, that's probably worth your time. Whereas if you have to spend $3,000 or $5,000 to acquire a $100,000 investor, that's probably not worth your time and it's probably not very scalable because you're already starting your investment in the hole. So if you need more information around paid advertising, LinkedIn automation, reach out to us and I'll point you in the right direction. This isn't specifically what we do, but I have done marketing for so many years that I understand all the ins and outs. We have lots of clients who are utilizing some of these strategies who we point to the right place. So we understand the ins and outs of how it works. Now, a lot of what people are suggesting as well is long form content. But what I say regardless is important is it is important to invest in a professional studio setup. If you guys are going to be putting out content, having Zoom calls, hosting sales calls with potential investors, I do think that it's important to have some of these things in place. So pause this or download this and really just take a minute and walk through some of these things here when it comes to long form content, podcasts, YouTube videos, and how you can leverage some of those things there. So last thing that I want to say is thank you for watching this training. If you have found this valuable and if this cheat sheet has been valuable to you, I want you to do two things for me. The first thing that I want you to do is share this with somebody who you think will benefit from it. And the second thing I want you to do is consider if you are in need of potentially our services, which is namely to help you get investor ready, to help you identify who your correct investors are. We help you put together world-class materials, pitch decks, financial models, FAQs, stories, really to help you propel into the capital raising phase and to capital and to get your capital raise done quickly. If you would need those services, please reach out to us and book a call below. We typically work with real estate funds, private equity funds, real estate deals, developments. We've worked with almost every single type of industry, all the way from AI startups to energy developments. We really know how to get you investor ready and to supercharge your capital raising efforts. Our clients are raising twice as much money and they're doing it twice as fast because out of the gate, they are ready to go. They have a plan. They understand the entire capital raising process. They understand not only what to say to investors, but how to find these investors, how to convert them, and how to expedite that and crunch that down to a matter of months instead of years. We have proven systems in place after working with hundreds of emerging fund managers and projects and syndication, doing dozens of our own projects totaling over hundreds of millions of dollars in capital raises. So we understand this process and how to make it quick and efficient and as seamless as possible for any type of strategy or industry. The only caveat that we say there is usually our clients are looking to raise at least $5 million on the low end, really in order for us to be very effective in helping them. So if this is you, visit goraise.io/join, or there's going to be an option to book a call below this where you can speak with myself directly. We will go over exactly what is your strategy, where you're at, what you're looking to accomplish, and how we can potentially help. Our products and services are very reasonably priced because our goal is to help you in the long term and set you up for success when it comes to not only your first raise or the next $5 to $10 million, but the tens of millions of dollars and the additional capital raises after that, having the right systems in place. We help individuals and teams get ready to raise and get investor ready in 30 days or less. We provide world-class materials. We work with you one-on-one to establish not only who is your investor, solidify your strategy, but lay the foundations and frameworks in place for a successful capital raise. So once again, I hope you guys have enjoyed this. Share this with somebody who you think this will be relevant for. Book a call with myself or my team if you are interested in potentially engaging our services and really just how we can potentially help you in your capital raising efforts. So thanks again, and I hope to talk to you guys soon.